to have your conversations outside, please.
Mr. Chairman, I'll try to be as brief as compelled by the time constraints that we currently have. Those of you who have read what I've written might have noticed that I've taken a few liberties with approaching the subject, which were dictated to me by what I believe to be also a true concern for internal market purposes to be fulfilled. I'm not going to go through the text of the Commission's proposal again because I don't have the time for that. I'll just go through the guidelines of what I've tried to sketch out. Those are 5 points, and then I'll very briefly tell you what the IMCO Committee has done as well. I believe that one of the crucial elements of the proposal that the Commission has tabled is whether or not it is going to apply to the whole territory of the Union, because if it does not, it is irrelevant to the single market. It is irrelevant or potentially irrelevant to the budget of the European Union, and under those circumstances it is my firm contention that it doesn't make sense at all. So the first thing that we should have to be certain of is that it applies to the whole Union. We are talking about EU law here and not about law applicable to some sort of a zone. We cannot do that. The second thing is that it should be obvious that, given that we're talking about a new fiscal instrument here, that this has to accrue to the budget of the European Union, not only in order to fill the budget of the European Union, but also in terms of crisis and in times of crisis to provide the Union with additional resources in order to boost economic development within the single market. That also requires, and that is something that I've ventured to suggesting, that we would bring it into application faster than the Commission has proposed, for the very simple reason that if we want to use another 2 years before this happens, it might just be that it does not fulfill any of the purposes any longer that we now contemplate by envisaging it. On the rates, you might have noticed that I've proposed to simply inverse them, which might sound strange to some, but which makes a lot of sense to me, for the very simple reason that I consider that there are elements, that there are financial transactions which are useful to the single market and those that are not. And that there are specific areas of expertise in financial centres within the European Union covering specific financial transactions which we need to shelter, whereas others we do not need to shelter. And that is why, notably, the whole investment fund industry, which can be used for a broad range of purposes in terms of boosting economic development across the European Union, as well as the pension fund area, should, in my humble view, be taxed less than all sorts of strange and funny derivative products, which will likely try to escape if any sort of taxation is applied to them anyway. So whether we do that only very marginally or whether we do it a little less marginally should not really do anything to them, whereas the other elements I'd really like to keep in the Union. Finally, a word on the choice of legislative instrument. It might just be that a harmonisation objective would be better fulfilled by something that is a regulation than by something that is a directive, which is why I've suggested in my text that in the review that the Commission is supposed to do anyway of this text, it also reviews whether or not the directive, as it now stands, will have then fulfilled the harmonisation objective it pursues, or whether it might make more sense to go for a regulation in the future and instead. Now, I've noticed that the Economic and Monetary Affairs Committee has a text now on the table which does not, of course, say anything on these matters. I did not expect them to. Their creativity is chronically limited. And not only is their creativity chronically limited, but also their readiness to defend the principle of the application of this thing to the territory of the whole Union. Now, I know that it might fall if one or the other member states terminally objects, but it is my contention that it is better not to have anything at all under those circumstances than to have something that only applies to the Eurozone, that ridicules the Eurozone, and it ridicules the norm setting that we have in the European Union. The good thing that the Econ Committee has contemplated, I also did that, but since it is not, strictly speaking, an internal market element, I was afraid it might be inadmissible, is that they have tried to extend the scope of the directive to instruments emitted by legal entities domiciled in the European Union, which widens the scope, and which is, in my view, the correct thing to do. Of course, again, it makes all the more sense the broader the area of geographical application for this thing is.